Hi everyone, welcome back to Be Rich. It's me and Anand again at the studio. And today we have something interesting. Usually we talk about US, Japanese, or macroeconomic stocks. But there was something interesting which is happening, which is equally important. And I thought Anand should definitely give his opinion about it and weigh in on it, which is corrections we are seeing in India, not where you thought we were going to talk about, which is the large cap and mid cap. We're going to talk about small caps today. So this will be a good warning why small caps for retail investors you should avoid, and why we don't recommend them, and why, unless you know what you're doing, it's definitely a no-no. And many of us do not know what we're doing, and this should give you a further explanation on why you should not venture into small caps unless you really know what you're doing. So, Anand, what is it that you'd like to tell us about small caps?
Top 1,000 small cap companies which are trading at less than 20% according to Economic Times.
Hmm.
There are 440 companies trading at 50% down. There are companies which are trading at 70 and 90% down
From their highs.
from their highs. The 20% will not hurt much, but if you have bought the near peak, this is why small cap mutual funds are underperforming. The small cap index is down 6%. They claim that the Sensex is up 10%. It is not, because what has happened is it went to 26,200, it corrected 10% and gone up 10%. So if you look at a 15-month period, it is where it is. It's not gone anywhere.
It's not moved anywhere.
So if you look at a 15-month period, the Sensex and the Nifty have not gone anywhere. But if you look at 1 year exact today, it had fallen off the cliff, it's got back up there,
Correct.
and it will fall back. Like I said, the government and RBI have given enough liquidity, saying you can borrow up to 1 crore again shares per person, and you are funding IPOs like anybody at 25 lakhs a person.
Yes.
So this increased liquidity is where the large caps have gone up by 10%.
Hmm.
Several large cap companies
Hmm.
like Trent, which is my favorite, so I don't want to take any stock which is not in my list. Okay, Trent, I want you not to consider it. It has dropped 45% up from the top. I'm still saying don't touch it.
Yes.
Okay, I'm still saying don't touch it
Yes.
because it can fall 50% from here because the earnings simply don't justify the price, and there is a deep correction. Let's take another stock. There's a man called Ashok Sutta. Ashok Sutta ran Wipro for many years and built Wipro into what it is. He fell out with Premji, he was retired, and he went and joined Mindtree. And then he had problems with the founders of Mindtree. He left Wipro for Mindtree. He had a problem there, they kicked him out. So, in anger, he started a company called Happiest Minds. And it went public, and it went to 1,500 rupees per share. And from there, it has fallen to 500 rupees. It's now at 39 times earnings, still very expensive. When a share like TCS is available at 2120, when I last checked,
Yes, you're
was
correct.
available at 2122 times earnings. Why will I pay 39 times for a mid cap? And from there is just fallen off the cliff, and it can easily go down another 50, 100%. It can go down to 50% because he is only a service provider. All our IT companies are service providers. He is a service provider. Tatas can provide better service than him. They can buy him out tomorrow. And there is no business in America. It has dropped. You compare Wipro, he is the company which he worked first, with Happiest Minds. In what way is Happiest Minds superior to Wipro? But that's the way the mad rush of retail investors push those stocks up. Raymond, a storied brand, right? They split the real estate. Father and son had a fight. He sold some of his brands to cut debt. It's now trading very cheap. Of course, the brand is there, but you push the price so up, and the management quality is bad, and then it dropped. Same thing, Indigo paints. It had Dhoni featured into an advertisement. They said it will be the next
Asian
Asian
paints,
paints
yeah.
killer. In came Birla Opus, knocked him down. He is now down. Tejas Network, something which we discussed in our sister channel, which I said don't consider.
Yeah.
In spite of it being in a Tata list, I said don't touch it because you would have hurt badly because his one big order was BSNL. Once that BSNL 4G is over, he doesn't have big orders.
And that is the main reason for the correction.
That's the main
The
reason for
main reason
correct.
for the correction, which people need to understand, is because it is not anything other than the fact earnings don't match the price. The price always has to match earnings. Anand's always said this. You have to see earnings for the simple reason that is what the price is established on.
And today, whoever has put it in small cap is now bleeding.
Correct. Because the earnings have just not been
And
there.
50%, 70%, 90% down is huge. Is Happiest Minds a good company? Yes, it's a good company. Is Sutta a good manager? Yes, but not at this price. And so when you see companies at 50 times, 60 times, and people say it will compound consistently, how will it compound consistently?
Yeah.
You mean to say everybody in their world will wear Zudio? Even then, it won't justify.
Correct.
Unless he diversifies and does other business,
And earnings come. Match
earnings
earnings
come.
justify.
I won't be surprised if Titan corrects. Titans is at 80 times earnings. It's a great company, no doubt. But what justifies 80 times earnings?
Very true. The fundamental mistake a lot of investors make, not only in small cap, medium cap, large cap, even in looking at stocks in the US and in Japan. One of the main reasons why people are very hesitant on a Toyota, Honda is they're like, it's not gone anywhere. But if you look at the earnings, like you correctly said, they're spewing cash. So for the price comparison, just on the earnings comparison, you see price to earnings.
And no, I'm trying to tell you. This is what Howard Marks says. When an investment goes right, you have not made the right decision.
Correct.
The right decision is to value the price of that stock. You bought the stock because everybody wants that it is good and it's going up. If it goes up further, does not mean you're right. Because sometime later it will hurt and hurt badly.
Correct.
Same thing that MicroStrategy company, Mike Saylor, he was a small software company. He abandoned his company, borrowed money to buy Bitcoin.
Yes.
Now Bitcoin doesn't give you any cash flow. He has bought bonds. He is in convertible bonds. He is giving dividends. He has issued equity. And the price of Bitcoin has come to 83. If Bitcoin remains low for the next, and he has 4% of all Bitcoins, and he has promised he will not sell. If he is forced to the day MicroStrategy is forced to do a fair sale of Bitcoin, Bitcoin will be back at 40, 30.
Correct.
So what I'm trying to tell you is sooner or later markets will teach you reality. So the cheaper you buy a stock in terms of not in rupee, anna, paisa or dollar cents, in terms of valuations, in relation to its intrinsic value, if you can buy it cheap, you will nothing like that.
Correct. So the
This is
fun.
what I wanted to say.
Yeah.
And this is I'll put that story up on the side. This is the moral of the story. You will pay a price and the markets will teach you. At that time, no point blaming somebody else. You have to blame yourself. This is known as self-attribution bias. I know everything. I will make all the decisions. When it goes wrong, somebody is responsible.
Correct. So anyway, I hope that gave you some clarity on why we avoid small cap and why we don't talk about small cap.
This is why I avoid small cap like a plague.
Yeah. So hope you got that clarity from us and why we never talk about it and why we don't recommend it. And I do recommend that you read this article Anand has shared with us. It's in Economic Times. Like Anand said, it's been put on the screen here. You can click on the link below and read the article and then come to your own conclusion, and do put it in the comments below what you've thought and what do you see insights maybe that we have missed. And we would love to have a conversation further with that with you guys later. Thank you for watching Bearish today and see you again tomorrow. Thank you.
Thank you for supporting Beirich.